Hi guys, so today I'm going to talk a bit of something different to the normal chart analysis, market outlook. I'm going to talk more of something which is really important, but not many people face up to it. So I'm going to discuss, or rather talk to you about 5 main reasons why traders are not consistent in their trading. So when we get into trading, most people, they get into trading to improve their livelihood, to have freedom, to have a second or third income stream. But the first time you get into trading, what I've noticed is many people, they jump in, they think it's gonna be an easy ride, we're gonna make pips, we're gonna make a lot of money. That's where they lose it, right there from the onset. That's where many people lose the plot. So I've compiled the 5 main reasons which I personally think are the issue when it comes to consistency. Right. So one of the hardest things about trading is to be consistent. Most traders struggle with this because they are so compelled by short-term rewards or short-term pain avoidance. Seasoned traders know this all too well. At all times, you have to be prepared for any situation the market might throw your way and be ready to do things you don't necessarily want to do. For instance, bias, directional bias, it can change in an instant. You need to be able to adjust to that. So, and that's what consistency means. It means doing things systematically and independent of the kind of day you had yesterday and the kind of day you expect today or tomorrow. For example, you got an entry signal but waited a little bit too long. The market is now leaving without you, right? Do you chase or do you pass on this trade? These are the questions that you have to ask yourself. Basically, are you gonna jump on a moving train or you wait for the next one? You wake up and notice a gap down below your stop loss. Do you close the trade or do you hold on? Many people, they close the trade. They don't respect their stop loss. You get a margin call. What do? If the broker calls you, hey, so and so, this is a margin call, you need to deposit more funds. You are in a drawdown. Do you reduce your size? Do you trade less? You are holding a losing position. Are you gonna reduce your trade size, or are you gonna limit your trade frequency? Right? No matter what you decide to do, given these scenarios, at any given point, no event should surprise you and leave you scratching your head and thinking, what should I do right now? You should be prepared mentally and psychologically. You should be prepared. The moment you are making decisions in the heat of the moment, you are at risk of having those decisions be motivated by your short-term reward seeking or pain avoidance tendencies. You are making a decision to say, no, let me make 20 pips quickly, let me make 50 pips quickly, so that you reward your short-term edge of wanting to be in profit. You see, that's why before approaching any market or any trade, you need an action plan. You need a plan. You need a portfolio of assets that you trade, and more importantly, you need to follow that plan consistently. You need to have a portfolio of assets that you trade consistently. Don't jump from one market to the other, one currency pair to to the other, one commodity to the next commodity. Today you're trading oil, tomorrow you're trading gold, the following week you're trading Euro USD. You see, that's all haphazard. You must have a plan that you follow consistently, or else your results will end up looking like this scenario here, which we have on the left. You're gonna have this type of scenario whereby your progress is all over. One point you're in profit, the next you're down, next you're in profit, the following day you're down, following month. So it will be a haphazard progress. There's no consistency. What you really need to do is to have a graphic representation of your progress in such a way that you are appreciating. You see, your progress in trading is appreciating. You don't want to have a haphazard trading progress. Now, number one of the most crucial personal attributes that you're going to need is behavioral consistency, right? Not technical knowledge, just behavioral consistency. This separates the pro traders from the amateurs. It's behavioral consistency that makes the magic happen. The good thing is that consistency can be learned. You can't say you can't be consistent. You can learn to be consistent. In fact, most living people with cognitive abilities, that's like primates, elephants, dogs, cats, pigs, horses, etc., can be trained to behave consistently in a certain way. So it's not just a feature of the human race. But then, why is it so hard for you to be consistent? Are you just someone with no discipline at all? You see, these are the questions you have to ask yourself. Are you a hopeless case, condemned to perpetual failure as a trader? Let me reassure you, you are none of these things. You can be consistent. Here are the main reasons why you are not consistent, along with some steps that I suggest you take, right? You forget about consistency. Yes, you forget, totally forget. That's the number one reason. In my opinion, it's so easy to get sidetracked by emotions or noise in the heat of the moment, and you forget your intention to follow your plan. Social media, Instagram, Twitter, we have so many profitable traders on those platforms. Don't get sidetracked by that. Always put a reminder. This is now a suggestion on what you need to do. Put a reminder note or some other visual reminder near your computer screen. Put up multiple reminders if you need to. Use that sticky note app so that it's always there on your desktop. It's important enough not to forget. It's important enough to create these reminders. Also, try up an effective morning routine. This is a great way to prepare yourself for the trading day. Consistently profitable traders have such routines for one main reason. It helps them get better at the skill of remembering to be consistent. Don't just look at the markets or get to take some trades haphazardly. You must have a routine that you follow. You don't take trading psychology seriously. You think that your current mindset is enough to make the magic happen. Somehow you assume that consistency is going to be easy if you have the right trading system. That is not correct. The reality is that it's not that simple. Depending on the situation, we often have all sorts of biases and blind spots that cloud our thinking. In the market, our loss aversion bias is the most common one. This makes us place greater value on a dollar we lose than on a dollar we gain. And people dislike the prospect of losing so much that often they'll choose to override a system with a positive expectancy just to avoid the pain of being wrong. You see? So my suggestion for you to get rid of this or to overcome this is spend more time studying the mindset component of this game. If you want trading to be a truly fulfilling and profitable experience, instead of being something that plays with your moods and consistently wears you down, don't neglect trading psychology. Work on it. Give your mind the power to alter its own fate. I hope you understand perfectly what I'm reading out to you guys. You're not fully committed to your plan, right? That's number 3. Very often, we just half commit to things, very much like the act of only being half in a relationship. With that kind of commitment, my guess is you'll be out of that relationship pretty soon. And it's the same in trading. Your plan is there to protect you against yourself. You need it. It provides a structure for you to navigate uncertainty. It is thanks to that structure that you can achieve consistent profitability. When you trade without a plan, you are asking for trouble. Random trading, opening trades in and out, up and down. You are asking for big trouble. And when they come, they do so with deadly momentum. So my suggestion to overcome this attribute of not fully committing is, preferably, you did want commitment and discipline to emerge from a profound understanding of what you are trying to accomplish, rather than having it be a mindless and unreasoned set of decisions. What is it that you're trying to achieve? So do this. Grab a pen and a piece of paper and write down with exquisite detail what you're trying to accomplish and how do you plan to do that. Decide right now if you really want to be consistent. Do you want it enough to push into discomfort when things get difficult? Follow your plan. Following your plan should be viewed as an essential act, even though it's a struggle most of the time. In order to see it through, it's so important to believe that it will be worth in the end, rather than doubting and judging how it feels in each moment. I'm sure most of you guys now already know that my personal plan involves me looking at the markets most days on Sundays. Then Monday and Tuesday, I'll be analyzing and seeing how my forecast is panning out. And mainly Tuesday, Wednesday, and Thursday, that's when you see me active in the market. Friday, I'm already out. So that's my personal plan. Right. The fourth one, you have a habit of running from discomfort or uncertainty. So basically, you are sort of like a coward. When the market does things that you didn't expect, or that you expected but refused to acknowledge, things can get uncomfortable. When things get uncomfortable, if you don't know how to handle yourself, you eventually shoot yourself in the foot. Now, to overcome this, my suggestion is train yourself to see discomfort and uncertainty as a signal to practice ease and equanimity. Our minds naturally want to get away from discomfort and uncertainty, but in trading, this is a bad strategy. Learn the painful aspect of trading. You must understand that part. It doesn't help to panic and run when you're uncomfortable. What helps is to face it. Face your trade opportunities. Face your losses. Face your failures. Face your successes. Face your fears. Face your discomforts. Face your life. Don't run away from discomfort or uncertainty. If a trade is running in a loss, make sure you respect your stop loss. Don't move your stop loss further just to satisfy your ego. Leave that stop loss, respect it, then you learn from it. Face your failure. The fifth one, you easily give into temptation and you do it out of habit. In the market, the potential to get rich quickly is omnipresent. It's always there. The potential is present in the market. Hence, people often experience the temptation to get into a trade with a larger lot size, even though they haven't learned yet to handle that size. When your stop loss gets hit, there's often the temptation to remove it. I'll just give it some more wiggle room, you might think. Actually, temptation is just a bit of discomfort, but your habitual response is to just give in. Your mind starts to rationalize why it's okay to do what your plan tells you not to do. See, your mind starts rationalizing why it's okay to do what your plan tells you not to do. Having to move that stop loss, it's not part of your plan. You let the temptation rule your response. So my suggestion to this is always approach trading with a plan. And unless you are a seasoned trader, never renegotiate. Never renegotiate it in the heat of the moment. Just don't let yourself go there. As I said earlier, you are too prone to biases, short-sightedness, or just trying to get out of discomfort. So remember this. Tell yourself you can't renegotiate your plan in the heat of the moment. The moment you see those red numbers flashing, you're in a loss. Leave the computer or even close it. Go run, go take a walk, forget about it, and then let the plan pan out. So, in conclusion, those are the main reasons why you are not consistent. Of course, there are others, and I'll try to explore more of this in the future posts and videos. As you see, the antidotes I offered are not all that difficult to implement. If you just consciously decide to do them and then take the right action to remember them, you are bound to create more consistency. So you need to understand that being consistent is something that you are going to have to learn so that you improve your trading career. So with that, guys, I wish you good luck and happy trading. Thank you.